The economic times are tough, and I believe we feel a pinch wherever we are. Now, Charles, there's a new development amongst the Kenyan commercial banks. They are renegotiating this whole aspect of receivership to focusing on how they can support creditors or other borrowers and how they can manage their debts. What do you think of that?
Well, it's quite interesting, Shamim, because what we are saying is that the economy is so battered and bad that even if these banks were to go into the market with these assets, they may not recover as much because of the soft belly that the economy is exposed to by the vagaries of, the global trends and everything. And it's not only in Kenya, even in Uganda, we saw a bit of a jump in non-performing assets by commercial banks. And of course, it speaks a lot to the kind of relationships now that have to happen between the banks and the borrowers. But hold on to that thought. We'll have it in our subsequent shows. It's Man and Markets. I'm Charles Boyd, your host.
And I'm Shamim K. Matovu. The private sector has grown tremendously in Uganda today, and it's got great potential to contributing to solving some of the challenges that we are facing.
Of course, some of those challenges have to do with production and productivity, and the private sector is quite crucial in dealing with those particular challenges. Now, today we pick the mind of the head of the Private Sector Foundation Uganda to find out what more can be done to rewrite this image.
PSFU is the Private Sector Foundation of Uganda, and it's essentially established to do four things. One is policy and advocacy for the private sector in establishing a conducive and enabling environment for doing business, grow jobs, boost the economy, and create sustainability for members, but essentially the economy as a whole. We're also responsible for business development services of our members and the private sector to ensure that there is growth. Our motto is business growth is our business. The third thing we do is we do capacity building and skills development of the private sector. We help to support young businesses, small businesses, micro businesses, businesses that are medium to grow to large, and large businesses to be able to establish a much bigger network. We also engage in building partnerships and ensuring that we partner our private sector people with the different institutions, Ministry of Finance, Trade, Agriculture, ICT. We have a growing youth population that is over 30 million now. We need to grow them in their capacities, in ensuring that once they finish work, they can get meaningful employment. And meaningful employment is no longer a desk job. It means being involved in trade, in business, in investment, in creating innovations that will bring in money. In the last couple of weeks and months, you may have noticed we have started growing beyond Uganda. We're looking at the East African community with Tanzania, with Kenya, with Rwanda, with Burundi, with DRC. The engagements are multifaceted. Of course, the biggest player or the principal player in the economy is government. Government has a mandate through the NDP3 to develop the economy. You may have seen the government has now launched the Parish model to be able to develop the economies at the grassroots level. Those are our members in agriculture, in trade, in small-scale manufacturing, in ICT. We are working with government at all facets to ensure that we create a working relationship with them, to ease on taxes, to give us infrastructure, to give us power, to create avenues through which we can get seed, build silos for storage, but also to ensure that they help us in value addition. You may have noticed that the government has provided some credit facilities. We think some of them may not be enough, that UDB needs to be more empowered to give more loans, but we're also saying that we have a big base at the bottom of small, medium, but also micro companies and industries that need support. So we're working closely with them, working closely with Parliament, but we're also ensuring that internally as PSFU, the membership starts to think proactively, start to think outside the Ugandan market, so that we can export. Right now, the PSFU is undergoing a capacity reassessment. We are looking at a strategic plan to be able to serve our members better, to ensure that this productivity can grow at all levels. The economy pre-COVID was projected at 6%. In the last 2.5 years, it really fell by huge margins. Almost half of that was cut. A lot of jobs fell. The economy really, in many ways, suffered heavily. But also, we are part of a regional economy and part of a global economy. The effects of Ukraine and Russia have not spared us. We've seen the rise in fuel prices. We've seen challenges in accessing resources. Many companies and businesses suffered as a result. Interestingly, we've had to engage government at all levels to ensure we restart a resuscitation of the different players. It's been slow, it's been tough, but we are beginning to see the numbers growing. We were part and parcel of the team that engaged with the government to remove, you remember we had a lockdown, which was only removed in January. We've seen some numbers beginning to grow, but obviously there's still a very big challenge in many places. Schools suffered, private sector companies suffered, but it's beginning to come out of that. And we think that our new strategy now is going to largely look at how do we resuscitate and bring in the necessary support that will grow our membership and also our fortunes. The last remarks for me would be that working with government at PSFU, we are looking at the region. Tanzania is opening up. We are thankful that the election in Kenya has ended, and we pray that it will end well and that normal business will come back. We have new doors opening in the DRC, in South Sudan, in Somalia. We call for members to join PSFU, become members of PSFU, so that we give you capacity building, give you skills support. We ensure that your advocacy and lobbying requirements are met. We shall ensure that we increase and bolster our established relationships and our partnerships with the development partners and government. But more importantly, we want our businesses to grow.
Now, if you ask any economist, they will tell you that debt is a good thing for a country. But of course, there are key questions that arise. And one of them is, where do you get that debt and what are you using that debt for?
And of course, Uganda's debt burden has taken up a huge chunk of our budget. We answer those questions tonight.
Uganda, like a number of developing economies, is swimming against many odds to keep the economy buoyant. A major threat today is climate change, given its immense impact on agriculture, which is a major sustainer of most households in Uganda and a critical contributor to the economy.
The domestic shocks are mainly climate change related, where the drought has hit agriculture, and agriculture in the price index is one of the biggest items besides fuel. So you find that when that big item of food is hit by drought, it has got implications on the supply of food in the country. And if the supply drops, even with the constant demand domestically of the same number of people consuming the same amount of commodities, you find that the price gap comes up, and that contributes a lot to inflation. That is the big domestic shock that we have got.
But even of critical concern for Uganda is the impact climate change has had on fossil oil investments, with experts now worried after the country seems to have anchored much hope on the oil subsector, which recently attracted a final investment decision from major players.
Climate change effects, which already the previous presenters have hinted on. These have resulted in a gradual withdrawal of financing to non-renewable energy projects. The President, when he was addressing the country recently, he gave us an update on the drop in the level of investment in fossil energy explorations. New explorations are now not coming on board as fast as they were because of the climate change effect, and this has an effect on us
The bigger stage, Uganda's economic observers worry about the monetary policy stance being taken by global players, which they fear might dampen economic activity, especially lending and borrowing.
In a bid to tame the inflation, countries have increased the interest rates. In USA, for example, the benchmark rate have gone up to around 2.25 to 2.5%. This is the highest they have seen in the US since 2008. Similarly, in the UK, their benchmark rate now is about 1.75%, one of the highest since 2008. The implication of this is increase the cost of borrowing on us because now the finances, the global financial market is looking at those markets which are quite more expansive and safer. And also it has reduced our access to the capital, as I said, due to the reversal or the reversed flow of the capital.
One of the major interventions government is fostering to drive growth and retouch the economic outlook is the Parish development model, which among others looks to turn around the agricultural sector and participants' model of operation to sync with the changing times.
In the medium term, we expect the Parish development model to have significant effect on the growth of this economy. The PDM is a multi-sectoral strategic intervention by this government to create socio-economic transformation by moving 39% of Ugandan households still stuck in a subsistence existence to the money economy. It is expected to boost food production for sure, contribute to value chain development and marketing.
Today, as the world reels with the COVID impact, which is a major contributor to some of the economic doldrums we are contending with, experts assert that keeping economies like Uganda afloat will, among others, take efficiency in domestic resource mobilization, tax administration, and utilization as we await the global resources space to stabilize.